Definitely. Yeah, definitely. Okay. Wait, sorry. All right. If you have joined, just say hi. Just say hi. Just say hi. If you have joined the live training today with Jamil, just say hi. Just say hi. Just say hi. Just say hi. Just go into the training. It's very necessary for our financial growth. Just say hi if you have joined the group. All right. You have joined this the live session. Just say hi. Just say hi. Let's know. Kind of like a right. Wait a minute. If you have joined the session, just say hi. Don't just join and be quiet. If you zoom now, block you. Just say hi. You have a lot to cover this morning. You have a lot to cover this morning. So just say hi. No, 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 no. Just say hi. If you have joined the session, I'm seeing four persons have joined. Say hi. You cannot hide. Just say hi. Let me know. Just say hi. You cannot hide. If you have joined the session, just say hi. Type hi. Only four persons have joined. One like. Okay, James Gabriel said hi. Please, you guys should respond. I'm saying only five persons here. Prosperous said hi. Please, where are you watching from? Is it River State? Is it Akwa Ibom? Is it Abuja? Type it there. Let me know. We have only 109 persons in this support group. Only few are attending. If you DM me, I will check your name. If you are not attending my class, I'm sorry. Attend class. People should attend class. Tomorrow now you will say that you paid money and this that. Say I. Kingsley. Okay, said I from Rivers. Please put your state. Where are you from? If you are from Akwa Ibom State, put it. Okay. Watching from Lagos, James Gabriel. Okay, good. Please call your friends to attend though. Tell them to attend. You are not playing here. Watching from Lagos, please like and comment. Also subscribe. Okay. Seven persons are already here. Say hi and tell me where you are watching from. All right. Like and comment. Subscribe. Uh, Port Harcourt. Okay. Prosperous. You are from Port Harcourt. Okay. Time shall tell. Please say hi. Say hi. 8 persons have joined now. 9 persons. I want people to join. Even if it's 50 or 100, people should join. Cannot be messing around. Just write your location. Kenneth said is from Benin, Benin City. All right, you are welcome, Kenneth. Okay, yeah, Kenneth, you're welcome. Please type your state and say hi. This morning, I want to break something down. All right, and all those analysis we did yesterday, we'll see the result. Okay. 10% have joined. So we have to watching from River State, Port Harcourt, Benin. Please type where you are watching from. Oh, there's no time. There's no time. There's no time. Yeah. Yeah, who you talk about? Okay. Please join. No link. 2 persons are joining. I've dropped the link for the Zoom the meeting. So click and join. Oh. All of you that are always regular to the live class, we thank you. Okay. Mhm. We are doing this to help you become proficient in your journey. Okay. Taiwo, that girl yesterday from Lagos. Okay, Taiwo, you are welcome. You are welcome, Taiwo. Adeniji. Adeniji. Please start coming now. I want to start. I've sent the link now. This the link now. I've sent it. Who is this person? Who is this person? Okay. Okay. The comment side. Ah, even okay. Okay, let me check it there. Uh, Al Mubarak. Let me check it. Please, the comment side should be there now. Uh, to comment is there. You see comment, just click on it. Okay. People should join or join. I want to start. You are welcome. People that are coming early, you are welcome. You cannot be coming early and then be hitting your stop loss anyhow. Tell your friends to attend though. People are just 109. Only if you are attending the live session. I want to start. I want to start. I want to start. I want to start. Al Mubarak, you said we are not seeing the comment section. You said you are not seeing the comment section. You are not seeing the comment section. Are you sure? Where is it? Is it top shot? It should be. Um, this boy, I'm about just check around, check again whether you see it. Check it again. Al Mubarak, check again. Do you see where the road comment? You see where the road comment? All right. Now, this morning, please take your book and pen. Don't just sit in front of your computer. All right. I want to break down some things for you. Okay. This morning, we'll be discussing about um, liquidity and inducement. Look at it here. Liquidity and inducement as applied to market structure. I repeat, liquidity and inducement as applied to market structure. That is our focus this morning. Liquidity and inducement as applied to market structure. Okay. All right. Before I go into the inducement and liquidity, let us look at those trades that we analyzed yesterday. Remember, okay, if you were in a class yesterday, put the pair that I did I did another one. The pair that I analyzed yesterday, put it in the comment section. If you were in the class, uh, you get yesterday now. So yesterday, put it in the comment section. Which asset did I analyze? See there. Mm, okay, yeah. Because I want to do right. Because I want to do that will be the analysis. So put it in the comment section. Put it in the comment section. Put it in the comment section. Which pairs did I analyze yesterday? Which pairs did I analyze yesterday? I'm waiting for you. Oh. Put it in the comment section. I'm waiting, I'm waiting, I'm waiting. Which of the pairs did I do analysis on? I'm waiting for you people. Oh. If you were in the class on Wednesday, put it there. Let me see. Put it to let me see. Oh. Okay. I am Lobby said Wednesday you analyze gold and Amiro USD. I think I have to show you. Okay. Okay, you are correct. Lobby, please, is it the only one that attended the class? If you were in the class on Wednesday when I did analysis, I said put the pairs that I analyzed on Wednesday. You guys should be active. You are making me to dull. Oh. I'm sure Taiwo too was there. Put it, except you are just attending class for, except you are just attending the class for fun. Okay. Put the pairs I did analysis on. Let's check it. Okay. Taiwo and okay. I'm waiting for you below. Which of the pairs did I analyze on Wednesday? Oh, no. Okay. Taiwan. Okay. Good. All right. Let's see the pairs. Okay. Let's see the pairs. Okay. We analyze good, right? On Wednesday, and I told you do that gold is going to buy, right? All right. Now, what happened there? You can see that gold has broken structure. Yeah, this is break of structure. So gold came to tap into this block. There is a fair value gap here. There is a fair value gap here, which gold has come to tap. All right. So we expect that massive push. All right, on gold. We are still expecting that push on gold. All right, before this week ends. Okay. All right. We also checked Euro USD, this pair, that on the 4 hour time frame, price has broken this structure, right? And I told you could have all right, to this area. Don't allow red candle to put fear inside of you. All right, you already know the bias. So why are you shaking? So now Euro USD has traded into that fair value gap here. This guy here. Let me use my this guy here. This guy. Hope you are saying it. So USD has traded into it. It may come back and play around, but it doesn't change your bias. You are still bullish. Don't allow this bearish candle to. I've been on a trade where red candle came almost to take me out before buying. Don't allow red candle to deceive you, because I know why I'm saying this. A newbie now will go and close a trade. You are bullish. You are bullish. I don't need to talk too much. You are bullish. All these are pullbacks. You can sell. I told you yesterday. You can sell, but price is bullish. So expect Euro USD to push. The only thing that can make this thing eat your asset is news, economic news. But we know that we are bullish. All right. We know that we are bullish. Do not change your bias. In fact, I think you have to see my face. Look at me very well. Do not change your bias. You are bullish. You are bullish. Don't go and start shaking, or you are trying to sell, you are trying to buy. That's why if you're using robots, all right, robots, they are not seeing your screen. Okay. Yes, I know that you are seeing my face now. I just switch. Okay, they are not seeing this. No, no, they said they are not seeing the screen. And then I've not switched. So please, if you can see this chat, just type chat there. If you can see this chat,
Are you sharing? Are you sharing this?
yes. Ah, no, sorry. I'm not sharing my screen. I'm sorry. Okay, all right. Sorry. Thank you. So, um, so on Wednesday, all right. On Wednesday, I did analysis on gold and Euro USD, isn't it? And we have discussed about the direction of gold and Euro USD. All right. So let us see the outcome. Let us see the outcome. Good morning. Second in command. Victor, okay. Rufus, okay. Rufus, keep. Okay, don't worry. I will shut you up. We okay. Oh, okay. Yeah, 11. All right. show us your screen. Okay. So now, please, if you are seeing my screen like this interface, type screen. Let me see. So let's go to the pair. All right. Now on Wednesday we did we did a top down analysis of bias on Euro USD, and I was asking you people that what is this line called? If you let me make it thicker. All right, so this line, most of you called it a break of structure, a change of character, and all that. All right, and we have concluded that that is not a break of structure. So that was confirmed by the daily time frame. All right, when we got to the daily time frame, yeah, I told you people that price has broken structure. Let me see. Okay. So I told the people that price has broken structure twice, right? Twice, yeah. So you should expect a little pullback before you continue that bullish trend. All right. So we now a 4 hour time frame now to mark out our recent change of character. All right, which use the 4 hour time frame. All right. So now from here, from this aspect on the 4 hour now, we had this change of character. So we are expecting a pullback. If you remember, Euro USD was here, here, somewhere here. It was somewhere here. That I said expect a pullback to continue the trend. Okay. So now you can see that price came and tapped us nicely on that fair value gap that we saw on the daily. Right? So this is it here. Price came and tapped into this fair value gap. We still have this other block. So even if price pull back, I will not be shocked. All right, but if price from here push to the upside, I have a high success rate. All right. So Euro USD is bullish. Price has tapped you in. You just rest for price to buy. All right. Don't allow this movement candle to deceive you. Let's go to gold. Now, this is gold, okay? From the daily time frame, we have concluded that gold is bullish, all right? Gold is very, very bullish, okay? And then we said that we are expecting gold to buy, all right, on the daily. So on the 4 hour time frame now, our area of test for this guy to go to become bearish is this low, all right? That's what we said on Wednesday. So we are still expecting this guy to buy. Remember that we're talking about liquidity and inducement. So I will explain to you why all this is happening. Okay, hold your bias, do not change. All right. So on the um, 1 hour time frame now, gold came, gold from here broke this structure. Let me use this. Gold came, had a break of structure here. Okay, let me take away this. Let me just take away this. All right, let me make that. Gold came, had a break of structure there, downwards. All right. So that means the trend is still bearish. If I am looking at this level here, all right, this level now, not here, at this level now, we have this break of structure here. We had that break of structure here. Gold is still bearish. Gold now change character, which I told you yesterday. If you remember, I did not cancel anything. It's here. All right. What I removed was that our long tool I use in measuring for buy and sell. Now, after this change of character, you expect a pullback to continue the trend. Now gold came here again. Remember that this is your break of structure. So that means this is your recent this high here is your recent lower high. All right, which gold has taken out. Hope you are seeing it. So you have a break of structure. You have a change of character. So so now you can expect a pullback into this area of interest. And now, if you look very well, if I expand this very well, all right, you will see that gold has traded into that fair value gap that we have here. That's the fair value gap. So you can expect gold to buy, all right, from there. You just have to be patient. You don't control the market, okay? So that is it for the gold. We'll see how it plays out from now till I think today is Friday now.
Yes.
So from now till let's say 4, 5. I mean, yeah, 4, 5, and then maybe probably Monday, Tuesday. We'll see how it plays out. All right. Do not change your bias. You are bullish. Okay. So let's look at what. Okay, let me go to the screen. Okay. All right. All right. So now this morning we'll be looking at liquidity and inducement. So please, apart from gold and you know Euro USD, which other pair do you want me to analyze after this class so that we can use liquidity and inducement to add to it? All right, to give you that odd. All right, put it in the comment section. Which other pair do you love to trade apart from Euro USD and gold? Which other pair? All right, which other pair do you love to trade? Okay, GP USD, Euro USD. Now they're going in the same direction. Yeah, yeah. Apart from GPUSD, which one do you love to trade? Which other one? All those JPY pairs, don't you trade CHL pairs? Which other pair do you love to trade? Put it in the comment section. Put it in the comment section. Which other pair do you love to trade? USD. Please answer which other pair do you love to trade apart from um, gold and Euro USD? Put it in the comment section so that after I finish, use that pair as an example. Please type type. Which other pair do you trade? I'm only seeing one person typing GPUSD. I'm only seeing one person typing. Please type. Are there people here? Please type which other do you trade?
Life shot.
Which other pair? Okay. Francis said
Hello, sir.
USD JPY. USD JPY. I see that most of you don't trade pairs like that. All right. Okay. Let's go to the chart. Let's go to the chart. Let's go to the chart. All right. Now let's discuss. liquidity and inducement. Pay attention. We are looking at liquidity and inducement. Liquidity and inducement. Pay attention. I will start with liquidity first. All right. They are not the same. All right. So let me start with the liquidity. Then, um, so what is liquidity? All right. Now, please, if you can see my chart, if you can see this white screen, just type screen there. Let me see. If you can see my screen, just type screen in the comment section. If you can see my screen, just type screen in the comment section. If you can see my screen, just type screen in the comment section. Okay. 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 Wise man said he loves trading synthetics. No wala. After this, we're going to synthetics. Okay. All right. Let's look at liquidity. Please pay attention. Oh. This is where I want to pour my heart to you. Okay. I want to break it down. Now, what is liquidity? You see, yesterday I told you people that whenever you have a break of structure, all right, you expect a pullback, all right, before the price continues. Now, the question you should be asking is that why is price pulling back like this before buying after a break of structure? Why is price pulling back after buying before after buying? All right. The reason is that market makers, people like when I mean market makers, I mean big banks, hedge fund institutions, CBN, you know, Jeff Bezos and Elon Musk, those people that move the market. What they need is liquidity. They need money to move the market. All right. Remember, the forex market is the largest market in the whole financial industry. All right. The crypto market is the second. I think the amount of dollar deposited in the forex market is around $6.6 trillion per day in the forex market. Crypto is less than that. So market makers need this money. They need your money, which is term liquidity, to push price upwards. Take for instance now, if you get a car, all right, you use 15 million naira to buy a car. Buying the car is not the issue. Even if you have oil in the car, you have the car is beautiful, the car is this, the car is that. If there is no fuel, provided it's a fuel car, if there is no fuel, you cannot move that car. All right, you can't. So the beauty of the car does not matter. What matters is the fuel to move it. All right. Now, if there is a fuel and the driver cannot drive, the car too won't move. So after a break of structure, if there is no available liquidity, price will not pull back. Price will continue to buy. So as a trader, your capacity, your ability to be able to point out or discern where that money or liquidity is from your chart is very, very important. That is why we have types of liquidity. I'm going to break all of them down. Once you understand this, you are good to go. The common the commonest form of liquidity, we call it trend line liquidity. I'm going to break it down. Just relax. Remember, you must apply all this with your bias. All right, you need to know the bias first. Now, we have trend line liquidity, we have equal highs liquidity, and then we have equal lows liquidity. All right, fair value gap is also another liquidity, which everybody knows. Other blocks also another form of liquidity. All right, so We have we have we have types of liquidity. We have what is called trend line liquidity. Trend line liquidity. Take your book and write to trend line liquidity. We have equal low liquidity. We have equal high liquidity. All right. We have value gap, FVG liquidity. Because all these are areas of liquidity. But now you can pick either trade to use as your area of liquidity. For me, I prefer trend line, equal low liquidity and equal high liquidity. The fair value gap is something that you know. All right, so I'm going to take it off because you know it already. So now remember, I said whenever price breaks structure to the upside or downside, we expect a pullback. That pullback can only be initiated on the premise of liquidity. When there's no available liquidity close to your block, that your other block, your bearish other block, your bullish other block, price will not come there. So now, technically speaking, let's say price has broken structure, all right, and then you expect price to come back to this. See, you don't expect. You look out for liquidity to bring that expectation. All right, you don't just say price. I'm going to see here sometimes price just pull back a little and start buying. There's no liquidity there. So that's why I don't want to include fair value gap because fair value gap does not usually attract price. All right. So you expect price now to come back, take out that liquidity, tap into your OB, boom, and then you're buying. All right. Now, this is not a change of character. I will tell you what it means in this class. This is not a change of because most people now, because they see break of trend, they call this higher low and then price will come back, they will change of character. They will not expect price to come back here and then they will sell. By the time they come back, price has hit their excess. Please, you have to grow up. This is not a change of character. As we proceed, I will tell you what that means. So let us look at the types of liquidity. Remember, we said we have trend line liquidity, we have equal low and equal high liquidity. All right. So, what is trend line liquidity? Pay attention. Oh. Now, let's say you are bullish, you want to buy. You came to the daily bullish, 4 hour bullish. It has broken this structure upside. All right. So now you have marked your take note that this is your low. All right. You have marked this low as your strong low. Now you have your OB here, your block, your bullish block, the last red candle here. Now you are expecting price to pull back. I think okay. Let me let me take this off. So as price broke this structure now, upside, all right. Let me okay. Okay. So now we have this break of structure. Please pay attention. Oh. This where some people miss it. This is a break of structure, meaning that you are bullish from the daily time frame. 4 hour has now shifted bullish. So now this is a break of structure technically. So if there is a break of structure now, you expect a pullback, all right? That pullback will be initiated on the premise of the presence of liquidity. Liquidity must be there. So take note, we are looking at trend line liquidity. So sometimes what price will do, price will not just come down and tap and go. No, price will do this. price will come down to almost to your point of interest, that your other block, and start doing this, and start doing this, and start doing this. So you now you say price is not, it is no longer ready to come back here. It will start doing this. Now, why price is doing that? You now you'll be thinking that okay, maybe price just want to react from here. Maybe there is a fair value gap there, which price has tapped into. And then you now you say okay, maybe price is not coming there. You will not call this your change of character. All right, pay attention. No, you will not call this your change of character, and then you will now mark this as your OB. All right, neglecting that you have an extreme OB that you want price to come to, because now price has deceived you. You have marked that area as your OB. So now you will start to look for buying opportunity. As you place your buy, price comes and tap you in and start buying. So thank God. You do your stop loss there. And then you target 1 to 3. By the time you come back from your house, all right, price has pulled back, tap into that area and buy. All right, because price is forming what we call trend line liquidity. Now, where is that liquidity? Pay attention, it's there. Hmm. From this low, you can see we have this straight line here. Eh? Now, it must not touch. It must not be all equal. But if one or two or three is equal, please avoid that zone. I carry God beg you. That area is liquidity, because market makers, no big bank, they know that people are not patient enough to wait for price to come to the area of interest before they can buy. So they will now start buying. They will now start buying from here. All right. They will now start buying from here, not knowing that that area is an area of liquidity. This line here is an area of liquidity, trend line liquidity. Let me make this thing go down. So you don't know that that area is in liquidity. By the time they come up, price has stopped them out and then push all the way to the upside. So now, to them, when price now this structure here, this low here, this low here, they will not call it a change of character, because now to them price has taken out this eye. All right, price has taken out this eye here, this eye here. So they will call this a change of character. All right, they will call that a change of character, and then they will expect price to pull back and then continue that pro trend, that bullish pro trend. But by the time they come back, price has pulled down and close below this low here, this low. So now they will now say, okay, we are now bearish. They will now also call here a change of character. All right. They will now call here a change of character. So now, once price change now, they will now expect price to come back to this. Remember, you have an OB here, a supply area here, or your bearish block, your bearish OB. So they will expect price now to come back here and then sell. But by that now, sometimes what price you do here is that price will come and react to. You see a reaction, a bearish reaction. That reaction is something which I'll tell you as you proceed. By the time they come again, price will now use force. If you see the force to push all the way, they will now quit trading and start calling trading a scam. Please, if this thing has happened to you, just type it has happened to me in the comment section. Please type it. If this thing now that I've shown you here has happened to you, put it in the comment section. Type it has happened to me. Ah ah somebody said you can't say anything. Outside with your. Can you see it now? Can you see it now? Can you see it now? Can you see? Okay, yes. Oh, that means so. Let me start again. If you can see my screen, type yes, please. Please. I've talked a lot. I thought it you are saying it. Oh, that's how some people have this screen. Like so, you can be looking at it. Please, if you can see my screen, type I can see, please, please. Or type. Okay, start from the very. Oh. No, definitely I will start. I will start. Please, please. I'm sorry. I did not share my screen. I've talked a lot. I've explained a lot. I've explained a lot. But I will start again. Please, if you can see my screen, start type yes, yes, okay, yes, okay, all right. So let's go back. I've explained a lot. I've explained all this. So let me start again. Let me start again. Let me start again. Start. No, okay, okay, okay. I can start from here. Okay, okay. I will. All right. So, so let's look at what is liquidity. All right. Let's look at what is liquidity. I've, I don't know why. All right. So now I've explained a lot. I thought you guys are saying. So now, what is liquidity? Liquidity, liquidity means. I'm coming. What is liquidity? So now, in the forex market, remember today our topic is liquidity and inducement as applied to market structure. All right. Now, liquidity means money, ego, cash, cash, and that cash is your stop loss. Because honestly, if you lose money, you are not losing your loss side, you are losing your dollar. So that is liquidity. Now, liquidity is what moves this market. Liquidity is what moves the market. Inducement does not move the market. It traps traders. It traps people. All right. So now, whenever price breaks structure, all right, whenever price breaks structure to to the upside like this, all right, like this, you expect a pullback. Yesterday I told you, all right, expect a pullback like this, all right, expect a pullback. So if you are expecting that pullback, the question is, what will propel that pullback to occur? What will propel that pullback to occur? All right, it is called liquidity. In the absence of liquidity, pullbacks are not sure. When liquidity is not in the market, you will not see pullbacks. Price will just continue to start to move and move and move. All right. So it is liquidity that enhances a pullback to an area of your block. Can be your OB block. Remember your your bullish order block is the last bearish candle. So before price can pull back now, there should be liquidity around your area of interest or your OB. That's what you are saying. All right. That's all about liquidity. But now, this liquidity can be found in a bullish market, bearish market, ranging market. But I don't go to ranging market. Bullish and bearish, okay. All right. Now, let us look at liquidity in this aspect. Let's say you bought a car, 15 million naira. In the car, 15 million naira. The car is very beautiful. The screen is okay. The steering is very nice. The back seat is okay. It has AC. It has this. It has that. The tires are bulletproof. Everything is bulletproof. But there is no fuel. Provided that car is a fuel car, you can't move it, right? If you start the engine, it will stop. There is a way you even persist. You damage something because there is no fuel to move that car. But the car is beautiful. That's why in this market, most people that are coming in with a lot of money, but they don't know when to enter the market. So market makers, remember that the people that move this market are big traders. They are smart guys, all right? Hedge fund institutions, banks, and big banks and CBN that move this market with big top investors like Elon Musk, Jeff Bezos, and all that. George Soros, or these people that move this market. So now they know that traders are putting their stop losses below lows. Let's say you are buying from here now, all right? You want price to come back here so that you can buy here, all right? Let me check again whether that thing is showing. I'm starting again. I'm starting again. All right, so pay attention. So now, let's say you are expecting price to come back here before you buy, all right? And big banks, those um smart guys, they know very well that some persons are keeping their stop losses below that low here like this. So because you are keeping your stop loss there below that low, there is liquidity. That's I will explain type of liquidity so that you now know how to point them out. So what will happen sometimes is that market makers will push price down, come down, take you out, and then start buying. Now um for the trader that is not experienced, he will call this a change of character. This here, he will call it a change of character. All right, so that price will pull back for him to sell. All right, so you will not be expecting price to pull back, you know, to just pull back to that area and sell. But by the time he will come back, price has hit its excess. So if you expecting price to do this, to come back here and sell, price will give you a reaction from there, and then you expect price to push. So if you don't understand liquidity now, you'll be losing money. You'll be calling everything break or structure, change your character. So now, in essence, liquidity is money. We have types of liquidity. So it is from these types that you know why price is pulling back to an area of interest. Because price is pulling back actually to it to take out a liquidity before buying. All right. So let's look at types of liquidity. Types of liquidity. Take your pen and write. Oh. I will not come back to it again. Oh. So we have the first type of liquidity that we have. We call it trend line liquidity. And then the I think it's two. Let me make it because we have equal highs and equal low. Okay, let me just make it three. So the second one is equal low liquidity. Pay attention. Oh. Now, one thing about this live session is that I'm going to teach you how to identify it. I'm going to show you on the chart. It's not just teach and go. We'll look at all the assets and I'll point it out. All right. Then we have equal high liquidity. We have equal high liquidity. So let us go deep into all these ones. All right, pay attention. Oh, now how many of you have experienced it before? Pay attention and be sincere with me. All right, you want to buy just like this now. You want to buy, and then this is where you want price to come to. Yeah, before you buy. So you have already set your buy stop, I mean your buy limit and all that. So that price can just pull back and tap you in before buying. All right, tap you in before buying. Unfortunately, price start doing this. Price has pulled back. Price has come here now, almost to tapping you in. All right, and then price start doing this. Price start forming higher lows and higher highs like this. Most of you, because you are not patient enough, take notes below your value gap. All right, that fair value gap is also another liquidity. That one we call it internal liquidity. But since you know fair value gap, there's no need to talk about it. You are buying from this premium. You understand that? Now, because some persons are not patient, and maybe price came and tapped into meanwhile they have an area of interest below that fair value gap. Now, this is what structural deceptivity, all right? Structural deceiving. Now, as price taps into this fair value gap, you can see that most people will call this a change of character, all right? Because of course, um, lower high to form high. So to some persons, they have a change of character. So let's call it a change of character. Pay attention, though. Let's call it a change of character, all right? So after that change character now, they will not expect price to pull back. They will not forget about this their first point of interest. They will not mark here again as their area of interest, forgetting that they have an extreme zone that they want price to come to. So now they will not set their buy stop, buy limit, and what have you. They'll put their stop loss below that low or on top of their first area of interest. They will not target this high for a 1 to 4 to a 1 to. By the time they come back, now sometimes when they set it, price will tap them in. Price will tap them in like this, bam, and start pushing. So they say, thank God, I'm good, I'm good, I'm good. By the time they come back, by the time they come back, price has crashed. Price has crashed below and then buy. All right, and then start buying, start pushing like this. Now, what happened here is because of what we call trend line liquidity. How do you now identify it? Pay attention. Oh. You have when you have one or two higher highs, I mean higher lows like this, all right, like this, all right. Provided now take note, they may not be equal, oh, all right. This one that tapped in can be like this. This one that tapped in can be like this. So now, what is happening here is this. There are people that we call trend line traders. They trade using trend line. So when price bounce, they call it third bounce strategy. In this community, we are not teaching you for you to be liquidated. We are teaching you for you to be updated. I hear what I'm saying. So now, technically, most of you, the way you started, this is just like trading support. As price came here, bounced, came here, bounced, had a change of character, they will want to enter from here, from this third bounce. So bought from here. So if they are buying from there, where is their stop loss? Their stop losses are below. Let me use this. Their stop losses are below this low, isn't it? That is where they'll keep their stop loss. Let me make that. So let me make this sticker. Let me send that to so I can see it. So their stop losses will be where that red line is. because price is bouncing, bouncing, bouncing. Let's buy. Now, below all those lows, we have their stop losses. So that is where we have liquidity. So all these lows are going to be liquidated because they have liquidity there. For liquidity, we use the person that is buying from here now. To him, is doing the right thing. Price will come back and take out all of them. I'm going to show you a trade that pertaining to this. I'll show you. Now, price came out and took all of them. If their stop loss went to that your extreme demand that we are not patient for price to mitigate. Price when they mitigated you here and pushed to the upside. So this is trend line liquidity. When you have higher lows equal like that, it's not hot. You can be 1, 2, 3 equal. Be very careful of it. All right. Now that same person, oh, that same person. Now because price has stopped him out here, it's okay. There's a change of character because technically, if you look at this very well, let me not take out that. Hmm. Technically, if you look at that very well, that person will call this a change of character again because to him he was buying and price disappointed him. So that place now to him will be a change of character. Yeah, that line because this low here. Let me take out this guy or better. This low here, this low is his recent HL higher low. So as price close below it, to him there's a shift in market structure or a change of character. So technically, bearish other block. So that guy now is going to be expecting price to come back here. Let me change that color. All right. So that guy now, you'll be expecting price to come back there so that he can sell. He can even place his sell limit there and target this low here. All right. So by the time price taps in, price will come back again to, to deceive you that the trend is not bearish, right? But you don't want to fall for that, all right? You want to wait for price to pull back, all right? Now, as price taps into this block here, to him, it's not bearish. Price will now react a little and give you some profit, let's say $200, and then by the time you come back after some few hours, you have been stopped out. You have been stopped out. You have been stopped out. Why? It's because you don't know the bias, and number two, this is not a change of character. It is not a change of character. It is called liquidity. Price has taken out liquidity. Smart money, all those big traders, they know that people are buying from all these lows that I marked. All right. Somebody is buying from here. Somebody is buying from here, buying from here, buying from here, buying from here. So expect them to push price down to take you out. Now, yeah, they are taking it. All right. Now, let me take you to my channel, Telegram channel. All right. Let me take you to my Telegram channel. All right, and show you this type of traps. Where is my Telegram? Okay. So remember, I just talked about trend line liquidity. I will show you from the chart, not just I will show you everything so that you will now go and practice. Okay. So let's go to my Telegram channel. Okay, and I'll show you. That trade was very very nice. Oh, where is my channel? Where is my channel? No, no, no. Oh, no, it's not this. It's Telegram. Okay, it's not on Telegram. It's on WhatsApp. That my community. So let's go there. Let's go there. Pay attention. I want to show you. I want to show you. I want to show you. What is this? Okay. I want to show you. Just be patient. I want to show you something. Just be patient. Be patient. All right. Be patient. Let me show you. All right. Be patient. What to do in the television channel? I don't know whether to do it. What if you do in the television? Okay. Okay. See. All right. Now, please, if you can see my Telegram T. Okay. Please, if you can see my Telegram channel, if you can see my Telegram for me, let me see. TG. If you can see my Telegram channel, just write TG for me. TG. Please write to let me know. Let me know. Let me know. Please, if you can see my Telegram channel, just write TG. TG. If you can write TG for me. Okay, thank you. Taiwo, thank you. All right, so let's go there now. All right. Now, this is when I was doing the technical analysis with my student. Let me take this out. I know from this. All right. Now, look at this trade. What date, sef? I think I sent it on the 13th of October. Now, look at this trade very well. I saved it for because I know that in the future something will happen. All right. Now, if you look at this screen very well, we are bullish. I've done my analysis. You can see that this top here, this look at my cursor. We call it cursor in computer. Okay, pointer. Okay. Look at this my pointer now. You can see we have a break of structure there. I wrote BOS there, right? Now you can see that all this is your recent higher low, higher low, higher low. So price from this trend line liquidity. We have this, this, and this very straight like that. Somebody's buying from here, somebody's buying from here, somebody's buying from here, buying from, just buying anyhow. Now, because I knew that that is liquidity, I did not jump and buy. All right. I waited for price to come back and tap me in. I set my buy limit here because this trade was one of the most sweetest trade I ever seen. No drawdown, just tap and start pushing. So price came and eat all their liquidity, take out their whatever nonsense risk they're putting there, and tap into my extreme. If you look very well, we have this bullish block there, that last red candle. We call it demand. Price tap into it and push all the way to the upside. So once anytime you see this, please don't buy. Wait for price to tap you in. Target that if price does not come down, push to the upside, leave it, look for another pair. Don't go and trade it. It may be a trap. Sometimes price can even push and come down again and tap before buying. So this is an essence for the YouTube class. Trend and liquidity is very important. It's very, very important. So now I'm going to the chart to show you that before I go to another this thing. All right,
Yeah, thank
type of liquidity. So you guys have seen, all right, how that liquidity played out. 21. Okay, yeah, 21. Good. So good again. There is a question I want to ask. Please, if this kind of thing has happened to you before, be sincere. Just type it has happened to me. If this kind of problem that I have discussed here now has happened to you before, just type it has happened to me. Just type it has happened to me in the comment section. If this issue here, let me keep it like that. If that issue there has happened to you before, just type it has happened to me. Just type it has happened to me. Just type it has happened to me. Please type. If this problem now that I have discussed here, this liquidity you in the past, plenty of times, okay. uh, user sef plenty times. Please type let's see how we can help you. If your car spoil, you can't take it to a doctor, you take it to a mechanic to fix it. All right. If you're having health issues, you go to a doctor. So if you're having shark issues, you meet a shark doctor. eh? Please type if this thing now has happened to you before, type it has happened to me. Minda. Please type if that thing there has happened to you before, type it has happened to me. Type, I'm waiting for you guys, so please type if that thing has happened to you before. We are still discussing about liquidity. We have not entered into inducement. Take note of that. Later. Victor hello, which is it okay. Victor hello, you have sent 7 gig for 1 month, but it won't last. So now Kenneth Kenneth and Taiwo, pay attention, write their names. Kenneth and Taiwo, please, whenever I ask you to subscribe or buy data, be very happy to do it. So Kenneth and Taiwo, you are to send me data. I'm going to put my account number here. 3 gig each of you, three gig. So you send it here. I don't know how much they are selling it. It can be 1,000. It can be 2,000. Okay. My bank is UBA. Any name you see there, send it to it. All right. So Taiwo and Kenneth, that is my account number, UBA. Send money for 3 gig. I want to see 6 gig. Please, for next week class. Next week, we are going into risk management. All right. Risk management. Okay. So let us go to the chart now and then identify trend line liquidity. Let's go to the chart and identify trend line liquidity. All right. Okay. Take a screenshot of this stuff here. Take a screenshot. Take a screenshot of it. Take a screenshot of that. Okay, Kenneth. Okay, you send the first day. Okay, then we'll pick somebody else to send. Okay, yeah, I think so. So let's pick a user. So user and Taiwo, both of you are to buy data for next week. 3 gig each. My this one is there. All right. My account number is there. 3 gig. You and Taiwo. Don't forget. All right. So let's go and I identify trend line liquidity from the chart. Now this chart is USD to JPY. Let's see. Okay. Okay. Now before I go into USD to JPY, we have to note the bias. All right. So from the 4 hour perspective now, obviously we can see that we are bullish, right? We, we are bullish. But now the question is, let's look at the daily time frame. Look at the daily very well. Daily is bullish, right? Now, from the daily time frame perspective, we had a break of structure here. This is a break of structure here, right? We had that break of structure there. We had that break of structure there. So the low that price should take out before we change the direction is this low here, which price did not take out. Price now pulled back again and broke this structure here. That is a break of structure again. So now the low that price should not take out is this low here. That is your recent higher low. Price now again pulled back. This is a pullback and then broke again this structure there. That is a break of structure there. All right. So now the low that price should not take out is this. So price can come down. We are not bearish. That's just a pullback. Price can come down, come down before buying. All right. So for me, I will not buy UID JPY now. I'll look to sell it, but the selling will be from the 4 hour candlestick, the 4 hour structure. So let's go there. From the 4 hour perspective, you can see that this is that low. Let me mark this up. Okay, now from 4 hour perspective, we can expect price now to you know pull back to pull back pull back to an area of interest, because the 4 hour time frame now, you will not see your block very well before we buy. All right, because if you look at the overall trend now, you will see that price has done this. From here price pushed to the upside, came down here, pushed to the upside, came down here, pushed to the upside. So we're expecting a pullback before we continue the trend. Take note of that. So now let's see the 1 hour time frame. If the 1 hour time frame will give opportunity to sell, you can sell. But remember that before pullback will occur, you have liquidity. That's what we want to identify. So from the 1 hour perspective now, we are seeing liquidity, trend line liquidity forming. We have this point of interest here. Remember I told you that you may not see that last bearish candle. As you scale down, you will see it. Now, what is happening here? We have this trend line liquidity here. All right, that is trend line liquidity, because you can see that from here you can even extend it if you want to extend it. But I mean, yeah, it's okay. Let me make this a little bit small. All right, so now below those lows, somebody is buying. Somebody bought from here as price bought here, bought from all these lows, equal lows, and so expect price now. What price will do is very, very simple. It's very, very simple. What price will do now, technically, on the 1 hour time frame, you can see again from the 1 hour time frame now, you can see that. Let me, let me, okay, let me leave it now. Let me take it out. From the 1 hour time frame now, you can see very well that we have this break of structure again. Yeah, make that it. All right, that is a break of structure. Now, if you look at it again, you have liquidity, trend line liquidity resting here. People are buying here, and their stop losses is just below that low. So you want price to come back there and take them out. You want price to come back there and take them out. All right. You want price to come back here because some persons are buying from here now. What you want price to do for you now is for price to pull back, take them out, tap into your block and then buy. All right. So now on the 1 hour, your block is not visible, right? It's not visible because what is there is a bullish candle. So on the 30-minute time frame now, you can see how this time frame aligns. On the 30-minute time frame now, we have now seen it. We have it here, the last candle, the last bearish candle there. All right, we have this last candle, bearish candle here. All right, so now what you should be doing is to look for selling opportunity down. So now, if you look at the 30-minute time frame bias, it is bearish. It is pulling back. The pro trend has not started. You are in the bearish trend. So what confirms this bearish trend? Let's find out. You can see that you can see that from here, price had a break of structure there. All right, that is a break of structure. Body closure. So that is a break of structure there. So this is your recent higher low here, which price has taken out to give you that change of character that most of you are talking about. All right. So that is where you have a change of character that will propel that pullback to that area of interest that we saw on the 4 hour time frame. Yeah, I do call it break of structure, but let's call it change of character. So that is why we have a change of character. So after a change of character now, what do you expect? A pullback, Abi? Now you don't want to start to sell from here. Don't try it. If you are selling from that means your stop loss will be up here. Yeah, and it's not good. So take your fib and then measure from, since you want to sell, measure from the recent high, drag it to where price is pulling back, which is here. You can see that price is at discount because below this that half percent or 50% level, we call it um, below it is discount, above is premium. So you want to be selling from premium. So above it now, what do you have? Above that level now, what do you have? You have your candle, your bearish block there. All right. You have your block. It's just that this block does not have a fair value gap. All right. But no matter what you do, you don't want to start to sell from here. Let's go to the um, 15 minutes and see whether we can. All right. Now you can see that on the 15-minute time frame. Okay, on the 15-minute time frame now, we have trend line liquidity, and then above it we now have our other block here, that guy, the last guy there. All right, that is your bearish order block, and above it you have your fair value gap there. Yeah, there is a fair value gap there. All right, there is a fair value gap there. There is an FVG there, a fair value gap. And then what next? You have your trend line liquidity all through here, forming here. You have from here down. Let me change that to black and then edit it to color. So now you can see that price is forming trend line liquidity, because as price here, price touched and pushed. Somebody is selling from there now. Somebody is selling. Price came, tapped. Somebody sold, tap them and then sell down. Following that pullback. Remember that you are not bullish. You're only catching the pullback. All right. So that is what you should expect from UJPY. Now, this you see, you see why your time frame is very important. Somebody can go to even the 5 minute and buy and catch that pullback. All right, and catch this pullback. Somebody can go to as low as even 1 minute. All right, and catch this pullback and catch that pullback, selling. Selling to where? To that your area of interest on the 30-minute time frame. All right. Yeah, this low there. Okay, let me take it to 1 hour. So expect now that something is selling. All right, selling all the way down here. So now you can see how all these aligns. All right. On the 15 minutes, we saw that price at broken structure, that change of character is now pulling back. Somebody can go to the 15 minutes and look for a change of character. Because, okay, let me shock yourself. Let me shock you. On the 15 minute, let me shock you small. On the 15 minute now, let me uh let me take this out. Let me just keep it aside. Now, on the 15 minute, all these areas, what price is doing here? If I go to the 5 minutes, you will see a change. Yeah, you can see what price is. Price now came here. Price came. This is the 5 minutes. I'm teaching you how to align all these things together. All right, but don't trade here. Oh. Don't go to the 5 minutes. Oh. I'm just showing you. You can see that price came at the break of structure here. That low was taken out. Let me. This is a break of structure. There. Let me expand it. Hope you are seeing that. So after a break of structure now, price will form a lower high, which price are taken out here. Yeah. So that's why the price close below this low here. Make price for no. After a change of character, you also expect a pullback. Pulling back to where? To an area of liquidity, which you have marked. Remember that you have your block here. This your block that you want to buy from. All right. But price cannot come there now without your liquidity, final liquidity. So where is our liquidity? Is here. You can see that week there and this week here. Because As price came and stop him out, tap into that your block. So now you can expect that massive movement. So now you, you can begin to understand why or how we align time frames together. But don't go to the 5 minute and trade. 1 hour is okay for you, all right? For your for your head to rest, your mental health. So on the 1 hour time frame now, you can expect you can see that everything I showed you is just happening here inside this zone here. So you have a break of structure just to enable that pullback to this area. Remember that this point of interest was found on the 15 minute, on the 15 minute, found on the 15 minute, because we had this fair value gap. So price ought to come back here, to come back here before we sell to that area of demand. That does not mean USD JPY is bearish. Anybody that you see buying USD JPY, eh, the person, if actually the person knows what he or she, you know is doing, is doing, the person knows that he is only counter trading. All right. But if the person thinks that the trend has started to buy because he's seen a counter trend, that person is putting himself in problem. All right. So if you understand trend line liquidity, put it in the comment section. Say I just type I understand trend line liquidity. I've talked, so it's time for you to type now. If you understand trend line liquidity now, just type it. Just type I understand it. Just type I understand it. Type. Just type I understand trend line liquidity. Because I'm moving to equal eyes, please. Please type. Oh, I'm waiting for you people to type I understand trend line liquidity. Okay, understand. Please type. Oh, type I understand trend line liquidity. Please type I understand trend line liquidity. We'll keep on identifying them. Type. Oh, trend line liquidity. Please type. Oh, are there people here? Please type I understand trend line liquidity. I'm waiting for you people. Oh. Please type. Oh, type I understand trend line liquidity. Okay, Taiwo says she's confused with different time frame use. Now, the daily 4 hour and 1 hour is okay for you. All right. What I did on the daily is to determine our bias, all right, and then our ranges, all right, which we have done here, all right. So after you have used your daily time frame now to mark out your recent break of structure, which is here, that that I marked, you expect a pullback. That pullback price is coming to take out a liquidity. So now on the 4 hour time frame, that's where you start looking for your bearish structure to sell to counter trade. If you cannot sell, you wait for price to go there on the 4 hour time frame. You just wait. All right, you just wait. So on the 1 hour time frame now, all you are waiting for is for price to just come to this area. All right, is for price to come to this area. All right, so that you can buy. All right, so that you can buy. These are the type of trade you can hold for 1 to 4, 1 to 5 weeks in one shoot. So as price taps in you here, you are buying, but you don't want to buy from here. It's wrong. You can wait for price to come and take out all this trend line liquidity, tap you in, and then you are buying from there. So this is a very good setup on UIDJPY. So Taiwo then you can stop on the 1 hour time frame. You can even counter trade. So 1 hour time frame now, all right. On this 1 hour time frame, okay, you can see that we have the change of character because this was that we had our first break of auction now. So what you are expecting, you are not expected to buy here. We have used our fee before. So now you expect price on the 1 hour time frame to pull back, take out all this trend line liquidity, and then you sell. So it's as simple as that. Don't go to the 30 minutes please. For a starter. Don't go there. Kenneth said, you understand trend line liquidity? Tigers is confused about different time frame. Please, daily 4 hour and 1 hour is okay. Don't do the 30 minutes. Eh? Please stop on the 1 hour, please. Obey instruction. It is when you have mastered it very well. You can even go to the even 5 minutes, even 10 seconds and still trade. But for now, please stop on the 1 hour time frame. Alright, so that's why I stopped on the 1 hour time frame here. So all you are waiting for is for price to pull back a little into that area of premium, and then you sell down. So if you are trading this pair, wait for that and take a trade. All right. So as take note, as you are trading, you know that you are counter trading. So you don't want to hold it for a long time. Now take note, you must not target this low. You can target 1 to 2, 1 to 3 is okay. Price come, take out all this 29 liquidity, tap you in, and then you are buying. Because you are extremely bullish. Okay, it's very simple. Okay, now let's continue to identify them. So if you are taking this trade on your EJPY, you can set your buy limit there. You wait very well on the 1 hour, but if you want to take the counter and wait for a pullback into that area of premium, which is above this line, that black line. Let me make it blue. So above that blue line, you can start to sell because we have trend line resting here, trend line liquidity resting here. So take note of that. So expect price to go and sweep them eh, before you sell. All right. So now what we are waiting for on this pair is for price to go there, we sell, and then we buy. All right. But if you want to take the counter trend, you can wait for price. You can buy, you buy to sell to buy. I repeat, if you want to take that counter trend, you can buy to sell to buy. All right, because you are bullish. Take note of that. So let's continue to identify it on the 1 hour time frame. That was so daily 4 hour, 1 hour is okay for you, okay? In fact, because of yourself, I'll stop going to the lower time frame. I'll stop on the 1 hour. So let's continue to identify our trend line liquidity. Okay. All right. We also have another one here. You can see very well that the last time we had the break of structure was here on this trend now. This one I'm not doing analysis. I'm not showing you. So after price broke this structure, you expect a pullback. All right, you expect price to pull back, right, to this area, your last candle there. All right. So now, as price is coming, price will be forming trend line liquidity. You can see we have it here. We have these 2 weeks there. Okay. All right, because somebody is buying from here, somebody is buying and buying. So price now came and crashed below that low and then start to buy. So liquidity has been grabbed. All right, liquidity has been grabbed. Liquidity has been, if you see it, you will know. So how do you now identify it? Just look at lows, all right, on the chart. Also, we now have another liquidity as price came there. That week there is a week there. There is a week there. All right, so price you use that as, so we have this trend line liquidity there. We have this trend line liquidity. Somebody is buying from there. Price stop them out. Came back here and pushed all the way upside, forming another trend line liquidity here for you to start buying again. And then what happened next? Price came back and stop here. Unfortunately, price did not tap you in. No problem. Price must not tap you in every time. Price must not tap you in every time. All right. So now what happened? Somebody bought from here and kept his stop loss somewhere here. Price has taken him out. Somebody also bought from here. As price had this first touch and second touch, yeah, somebody bought. A stop loss is here. Price has stopped him out. So all these are trend line liquidity traps. You don't want to fall for it. You don't want to fall for it. Wait for price to come to your extreme level. That's what Jabby said. Your extreme level. All right. Price did not come to it. Leave it. You don't have any trade that day. You must not trade this thing. All right. So let's continue to identify it. Okay. Yeah, you can see we have this break of structure again. Bullish. All right. We have this break of structure there. We have our last low, the last bearish candle. This is the 1 hour time frame. That is your last bearish candle. This one, you are very lucky that price tapping in. But now that pullback cannot be cannot be fulfilled without the presence of liquidity, trend line liquidity in this case. All right. So we have that break of structure there. Break of structure, you expect a pullback. You expect a pullback. That pullback, price must take out trend line liquidity. Where is our liquidity? We have this week to that week. All right. All right. So we have this week here. Somebody bought there. As price came back here. As price from this other block and push and came back, somebody bought from here. Price came back again. Somebody bought from here. Came back again. Somebody bought from here. So what price you do is price to slash down, take them out, take out their stop losses and then buy. All right. So that is your trend line liquidity. So now your duty is to go to your chart and find it, send it to me, screenshot it and send it to me. Take note, we are talking about trend line liquidity. So now as price takes out this, you have a greater order. The main price takes out a liquidity, you should expect a very prompt run, all right? An impulse. Now look at this again. As price tap you in here now, let's say you set your buy limit and your stop loss is here. As price tap you in, you can see price came back again. As price tap you in here now, price push. Price now came back again. Why? Before price push it to the upside. We have also trend line liquidity there. We have this trend line liquidity. If I expand this chart very well now, you will see very well that we have all this liquidity here. Like I said, one or two is okay. Now this one now, you can see that. Let me explain it very well. You can this week equal. This one was violated. This week equal. So all these